Hello, ACCA students. Let me just say, ACCA Performance Management students who are ready to participate or to sit the September 2024 examinations. This is now the time for you to prepare yourself for that examination. In this particular video, I'm going to give you, to walk you uh, through two throughput accounting related questions, which I found to be very interesting and worth of sharing with you, especially those who attempted our second week assignment. Okay, because those who are studying with us, they have got to do weekly assignments so that by the time we reach examinations, you guys would have learned a lot. All right, so our study program is like you need to study for 10 weeks, okay, whereby you will be given videos and tutor support plus weekly assignments. So it's a 10-week program. After the 10 weeks, you then have to do the revision phase with us, which takes about 2 to 3 weeks, okay, of study, and then you become ready for your examinations. All right, so without much ado, let me give you a brief overview of throughput accounting and then start solving the questions with you again. All right, now throughput accounting. What is throughput? Throughput is given by this particular formula. Okay, that is this formula. You need to uh, appreciate very well this formula. It's like the formula for the calculation of contribution. Remember, when we calculated contribution, we said this is sales or selling price minus variable costs. Selling price minus variable costs. However, this particular contribution is a special one, okay, where we only consider our variable cost. In this case is only material cost. But in traditional marginal costing, the variable cost is made up of direct labor and direct materials and other direct overheads. If you still remember that. However, in this case, we only consider materials. So the variable cost component would be only relating to material cost, direct material costs. All right, which means any other cost is going to be treated as a fixed cost, okay, or part of what are called total factory costs. The direct labor, direct overheads, and the other fixed and other costs, like for example fixed costs, they all form what is called total factory costs. And these total factory costs are also called total operating costs or total operating expenses. They can also be referred to as conversion costs. Conversion costs. So be careful there. The examiner might play around with these names so that he might confuse you by the end of the day. Remember, this is a professional examination and you need to show some little bit of maturity. Otherwise, you're going to fail a very easy paper. All right, so but what is throughput? Throughput is just the rate at which an organization or a process is producing output or is completing its tasks. All right, so that's throughput. We are talking of production efficiency or production optimization. All right, so it is the rate at which the organization or the process is producing output. So the idea of throughput accounting is to ensure that the organization's processes are always optimized on a continuous basis. Remember, it is in line with the theory of constraints or also the theory of just-in-time production. All those things, they are aligned to this throughput accounting philosophy. So there are some ratios you need to understand. For example, the return per factory hour. This is the throughput return. All right. This is just a shorthand. So it's throughput return per factory hour, which is given by the throughput itself, and we know that throughput is computed as sales revenue minus material cost. So throughput over time on key resource, and the word key resource is just the same as bottleneck resource or the constraint. Bottleneck resource or constraint or key resource or key limiting factor. All those terms, they're just one and the same thing. So this is why I'm saying this theory is also related to what is called the theory of constraints. All right, then there is the cost per factory hour, which is given by the total factory cost. Remember, I said total factory cost could also be considered or referred to as the conversion costs. All right, so total factory cost divided by the time available on the key resource, and time available can also sometimes be referred to as the usage. Total time available on the key resource. So it depends on the information. Sometimes the examiner might give you information relating to the whole year of hours, okay? Or sometimes they might give you a daily hour period and so forth. You need to work out to find out which particular figures should you use. So these two ratios, the throughput return per factory hour and the cost per factory hour, they help us, or they feed into what is called the throughput accounting ratio, which wants us to have the return per factory hour divided by the cost per factory hour. So by the end of the day, you should be able to compute the throughput accounting ratio. But after you compute the throughput accounting ratio, you should be able to interpret the ratio. Total throughput should exceed total factory costs. Otherwise, the organization will make a loss. All right? This means that the throughput accounting ratio should exceed 1. Okay? The throughput accounting ratio should be greater than 1 if a product is to be viable. Priority should be given to those products which generate the highest throughput accounting ratio. So if you're having an option to make on products, on a series of products, then you compute the throughput accounting ratios, and they both produce positive, or let me just say, throughput accounting ratios which are greater than 1. You then have to select those products with throughput accounting ratios which are larger than the rest, okay? Because it's not only going to be beneficial to you if you just pick any of the products, because the idea is the higher the throughput accounting ratio, the better. Okay, so a throughput accounting ratio that is not much higher than 1 is barely profitable. So if sometimes the throughput accounting ratio might be 1.15, whereas another product might be having a 1.92 throughput accounting ratio. Therefore, you just have to pick this product with a higher throughput accounting ratio. Remember also that this statement is also referring to the viability of the product. If the product has got a throughput accounting ratio which is more than 1 part, which is not much higher, it means that the product might not be profitable, might not be that profitable. Throughput accounting ratios can also be used to assess the relative earning capabilities of different products. Products can be ranked in order of priority for manufacture and sale in order of their throughput accounting ratios. Higher throughput accounting ratio should be given priority over lower throughput accounting ratios. Okay, so however, ranking products in order of priority according to their throughput account ratio will always give the same ranking as putting them in order of throughput per unit of bottleneck resource. So that type of ranking which we used when we do the traditional theory of constraints, if you still remember, okay, where we rank on contribution per limiting factor, something like that. So in this case, instead of using the traditional contribution, we'll be using the throughput uh, contribution per unit of bottleneck resource. So if you rank the product on that basis, it means that you are also going to find the same uh, conclusion or reach the same conclusion if you rank them according to their throughput accounting ratio. That's what the statement is referring to. Okay, now this is the first question which we need to deal with. All right, FGM PLC produces a single product, the Baker X, which passes through three different processes, alpha, beta, and gamma. The throughput per hour of the three processes is 25, 30, and 32 units of Baker X respectively. All right. Um, so you discover that sometimes you might be given the throughput in terms of units, not in terms of money. All right. You just have to be comfortable with that. You mustn't be dazzled because you have been given throughput in units in terms of uh, uh, and not in terms of money. That shouldn't be a worry for you. The organization operates for 10 hours a day, 5 days a week, for 50 weeks of the year. The Baker eggs can be sold for 420. So that one is your selling price or your sales information. So the sales per unit or the selling price per unit, that's 420, and it has material cost of 170. So that alone tells you that the throughput should be 420 minus 170, and that should give us how much. Let us use this calculator. 420 minus 170. So the throughput is 250. It is anticipated that annual conversion cost will be 1.8 million. And here they did not talk of total factory cost, but they used conversion cost. So this is why I was saying that you need to be very ready and flexible for you to be able to find solution for this. So the question is, what is the throughput accounting ratio per day? And we have our formula for throughput accounting ratio, if you still remember. Okay, this was the formula which we are talking about. So let us first calculate the return per factory hour, which is this formula, and then the cost per factory hour, which is that formula again. So ladies and gentlemen, that's the computation. As you can see, let me just take you through. So the throughput return per factory hour, as I have already indicated, is the throughput. Okay, this is the formula for the throughput, as you can see there. Right, multiply by the time on the uh, I mean okay, guys, I want you to observe something here. Okay, when I say 420 minus 170, this is the same formula for the throughput. Uh, for the throughput contribution, where we are saying that the selling price is 420. All right, we say that selling price minus material cost, and the selling price is 420. Okay, and then we deduct material cost per unit, and we are going to get 250. Okay, so 250 is the throughput contribution. Then we multiply this by 25. Sorry, this is 25 units. Remember, 25 units, as you are seeing here. But there is a confusion which I want to discuss about, because our formula is speaking of something else, because we are saying from the formula the throughput return per factory hour. All right, the throughput return per factory per factory hour is actually the throughput. Okay, the throughput divided by the time on key resource. All right, divided by the time on bottleneck resource. All right, now the time on the bottleneck resource has been determined to be all right. So you need to first of all determine which was the bottleneck resource, because from the question we are told that there were three processes: the alpha, beta, and gamma. All right, and when you look at their throughput per hour, the throughput per hour of the three processes is 25 units, 30, 32 respectively. All right, so you can see that the lowest throughput per hour is 25 units, and obviously alpha is the bottleneck resource because its throughput per hour is the lowest. Okay, so it means it produces 25 units every hour. Okay, so the time on this resource is actually the time taken by this process um, is 25 units per hour. All right, so how many hours does one unit take? Okay, because it produces 25 units per hour. So how many hours does one unit take? Because remember, for us to determine the time taken on bottleneck resource, the time taken. So how many hours is taken per unit of bottleneck resource? So this is why you are going to, okay, so it means that on the numerator, we are going to put um, the uh, the throughput which we have calculated here. So we are going to put that the throughput is going to be 250 multiplied by 25, that is 6250. Okay, and then uh, um, okay, okay, no, the throughput is not that. Sorry there. Let me just try to erase. Actually, that one is the throughput return per factory hour. All right, so what I'm trying to say is the throughput itself was actually 250. Remember, this is the throughput itself, so the throughput is 250. All right, then divided by the time on bottleneck resource. So we are saying that 1 unit, because the time on bottleneck resource, we are looking at the time per unit. Okay, so the time taken by 1 unit of a bottleneck resource. All right, so that's 1 over 25. We are saying that every hour this process produces 25 units. get me right. Every hour, this process takes 25 units. So how many hours does it take to produce 1 unit? So this is where we are saying we divide the total number of units, we divide the hour by the total number of units taken, so that we get the number of hours per unit. So we divide the time over the total number of units produced in that particular time. And this our metric is per hour. So we are going to say 1 hour divided by the total number of units produced in the hour. So that's the formula actually. I mean, that's how you express the formula for the time on bottleneck resource in our formula there. Let me try to clean up the screen, so that when we talk about this, we won't confuse you. All right, so that's how you get this, I mean, the variables for this element. All right, I mean, that's how you express, because the time on key resource. The key resource was the process alpha, okay, and it was a limiting factor because its throughput was lower per hour. So we are going to say, how many units does it produce in an hour? We are told by the question that they produce 25 units. Okay, so every hour they will be producing 25 units, which is lower than the other processes. So it means that they produce 1 over 25 units uh, hours. So in our terms, that's 1 over 25, which is 0. That's 0. Is it 0.4? Let me check with my calculator. 1 over 1 over, okay, 1 over 25. Yes, that's 0.04. Okay, so you can then say this is equal to 250 over 0.04, and you are going to get the same figure there. 250 over 0.04, you get 6250. So that's the return per factory hour. Or you can then do the same computation as we did. Instead of using the zeros there, you can as well just use 250 over 1 over 25. This is the same as 250 over 1 multiplied by 25. That's the same. All right, that's how you can because when you use the multiplication there, it's like when you divide a number by a fraction, it means that you can multiply that fraction in an inverse or in an inverted way. Okay, that fraction is inverted. That is, it's the numerator becomes the denominator, something like that. Okay, so this also gives us the 6250. All right, this is the same amount there. So this this is why you see the expression was presented that way: 420 minus 170, which was the throughput, multiplied by the time on bottleneck resource. Okay, yes. So we then proceed with the formula, and we arrive at, so we have found the first part of the formula, that is the throughput return per factory hour, and then we need also the cost per factory hour. In this case, we are going to say the total conversion costs were 1.8 million from the question. 1.8 million divided by the time on the bottleneck resource from, this is actually the total time available on the bottleneck resource. And we are told, that these guys, this organization works 10 hours per day, 5 days a week, and 50 weeks in a year. So which means we are looking at 10 multiplied by 5 multiplied by 50. So that's 50 multiplied by 50, isn't it 2,500? Okay, so that's 2,500 here. Okay, and then we are going to say 1.8 divided by 2,500, and I'm sure we are going to get 720. 1.8 divided by 2,500. Yes, we get 720. And then we have to slot in the formula, the throughput accounting ratio there. We're going to say the throughput return per factory hour, okay, which was this amount, 6250 divided by 720, as you can see there. So we are going to arrive at that figure. Okay, I understand it has been a rambling process, but through practice, you will then be able to understand that this is very, very easy. All right, so let us then try to attempt an almost similar problem, but this time there are a lot of things we need to compute so that we cement the throughput accounting theory once and for all. John McLean manufactures computer components. Health and safety regulations mean that one of its processes can only be operated 8 hours a day. Okay, so we are told that they can't exceed 8 hours a day on one of their processes. The hourly capacity of this process is 500 units per hour. So in 1 hour, they produce 500 units. So obviously, you now know that the time on this bottleneck resource, time on bottleneck or on key resource, bottleneck resource is now 1/500 units, which means each unit takes about 0.00. How many zeros do we need there? Are they enough? Are they enough? Let me check. 1/500. Yes, 0.002. Okay, because that's the confusing figure in this computation. All right, the first part on the calculation of return per factory hour is very, very problematic. So you can as well see that the return per factory hour is now given by the throughput, and the throughput, ladies and gentlemen, what is the throughput? The selling price of each component is 100 and the unit material cost is 40. So we can see that the throughput is 100 minus 40, that is 60. Okay, so and then we are going to say divided by this amount. this 1 over 500, and we know that it was 0.002. Okay, so you can then get the figure of how much 60 divided by 0.002, we get 30,000. That's the return per factory hour. We are done with that figure. Okay, what about the total profit per day? Now, for the profit, ladies and gentlemen, I don't want you to be dazzled with that computation, because that's the easiest one. Now, the way to profit comes from absorption costing. Okay, and profit is given by the selling price minus the total cost. Okay, that's profit is equal to selling price minus total cost, or sales minus total cost. And in total cost, that's where we have the variable cost as well as the fixed cost. So a combination of variable cost and fixed cost give us the total cost. So in other words, since we are doing throughput accounting, we are going to say the total cost is actually the material cost and factory cost. A combination of material cost and factory cost. All right, good. So as you can see here, we are saying the throughput contribution itself. All right, the throughput contribution was this one, the 60, which we have computed, multiplied by the number of units. Remember, we are talking of 3,000. Expected production is 3,600. All right. So here, the only cost, remember, I have indicated that we are looking at a situation where the total cost includes the material cost itself plus factory costs or other costs. All right. So here, the throughput contribution is taking care of the material cost, is deducting the material cost from the selling price, which is the 100. But we further deduct the factory costs. All right, because I say that for us to arrive at a profit, we need to say selling price, which is the 100, minus total cost. All right. However, in this case, we are told that the material cost is 40, and then the rest becomes the fixed cost. However, you can't directly deduct the factory cost when you are, because here the 100 minus 40, this one, those figures are on a per unit basis, whereas the factory cost or the conversion cost are in total. So you then have to first bring these figures to the total, the 100 minus 40, then you get your 60. You need to multiply that 60 by the total number of units so that you can match that that figure or the resultant figure with the total conversion costs. So this is why we are going to deal with these items first. The multiplication first, and then we go to the subtraction. So we need to first determine the product the product of 3,600 multiplied by 60. All right. If we use our calculators, what figure do we get? 3,600 multiplied by 60, we get 216,000. Then we deduct the 144,000. Obviously, we need to arrive at that figure. Just cross-check with your calculators, ladies and gentlemen. Yes, 72,000. Okay, that being done, okay, here we have already calculated this figure. If you still remember, like I said, we said return perfect hour is given by the throughput, which is sales minus direct material costs. That's the throughput, and we determine the throughput as 60. Okay, it's 60, 100 minus 40. All right, and the usage of bottleneck resource in hours, we determine that as 1 over 500, because this process manufactures 500 units per hour. So we then ask ourselves, how long does it take to produce 1 unit? So we are going to say 1 hour divided by 500 units, which are the total units produced in an hour. All right, and then you can then as well go pedantic and say, all right, you can just say, since 100 minus 40 is 60, you can then say straight away multiply by 500, because you know in your mind that it's 60 over 1, because we are saying that when we multiply, when we change or express that um, um, fraction into its simple terms, you then have to invert the denominator. Okay, the 500 then becomes, comes to the top, and 1 becomes the ultimate denominator. So when you multiply, you arrive at 300,000. Or if you don't want that, you can as well proceed with this. Like, we know that the numerator is 60, but we have already found out that 1 over 500 is equal to 0.002. All right, so if you solve this, you can still arrive at 30,000. We are saying 60 over 0.02, we arrive at 30,000. So it's very, very simple indeed. Now that we have the figures, we can then proceed to the computation of return per factory hour. There was a figure which we didn't calculate, and that was the conversion costs per factory hour. In our formula, all right, where's the formula? All right, the cost per factory hour, or conversion cost per factory hour, is total time available on key resource. We are told that the total time available was how much. We then have to ask ourselves, ask the question. We are told that they can only operate 8 hours a day. Okay, so we then come here, because there's no need for us to worry about the annual cost, because the figure which we are given is on a daily basis. The factory cost, the daily factory cost or conversion cost, were $144,000. So we just have to use the like and like, something like that. So the total conversion cost per hour So in this case, we know that the total cost per day were 144,000. Okay, but the hours available are only 8 hours in a day. So we then come here and say 30,000 divided by 144,000, which was the total cost, divided by the hours per day. Okay, you can as well express this figure using the same principles. That's 30,000 over 144 multiplied by 8, because we say that the 8, the ultimate denominator, becomes the numerator. So that's 30,000 multiplied by 8, we get 240,000. Okay, 240,000 divided by 144,000, and that's 1.67. Okay, let me just cross check to see if we have been consistent. Ladies and gentlemen, that's my pick. All right. Okay. Seems we have been very, 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 very consistent. I think from my understanding, we've uh, done justice to the questions. It's only that here, this part of the formula was not done separately. However, you can see that it's still the total costs, or the total conversion costs, divided by the time on the divided by the time available for the bottleneck resource. Okay, so that's the total cost, or total conversion costs, were 144,000 divided by the time available. The time available per day was 8 hours. All right, and the daily costs were, the daily factory cost or conversion costs were 144,000. And that's how, that's why we divided 144,000 by 8. All right, you can do the formula on a step-by-step basis, okay, or on a break up basis or breakdown basis. But because of time in the examination, you might discover that you have no that time to do these things separately. Okay, but it's encouraged that you do your workings on on a separate uh, worksheet basis. Okay, or on in bits and pieces, so that you are systematic. Otherwise, you might end up confusing things and end up failing. All right, so until next time, ladies and gentlemen, uh, may you please continue to feel excited, and yeah, okay, guys, this uh, camera is not working. All right, that's fine, it happens. So guys, that was all from me to you. Until next time, please continue to feel excited. Okay, these are my numbers. If you feel like you need my assistance, I'm always available for you guys, so that we save you from any heart break or heart attack or depression. All right, so you need to love yourselves, guys. Okay, you are so special. You are so special to the ACCA, the ACCA. You are so special to me. You are so special to the accountancy profession. All right. So, guys, I'm signing out. All right. Bye.